ETF Spotlight today, we are taking a look at the wild week all across energy. Dom Chu has that for us. Hey, Dom.
All right, so, Carl, energy, wild week, but it's still, wouldn't you believe it, the only S&P 500 sector that's positive so far in this early part of 2022. And by the way, not just positive, but we're talking 18% positive versus the rest of the S&P 500, which is down 9%. So a massive performance gap in just the first 3 to 4 weeks of this year to kind of start things off. That energy trade is being driven in large part because of rising oil prices overall. Today's focus has, though, been on a mixed earnings report coming out of Chevron, the second biggest U.S. oil and gas producer out there, second only to ExxonMobil. But if you take a look over the last year, those lines have tracked pretty closely, but Exxon has been an outperformer over Chevron over the course of that 1 year period. You can see 63% for Exxon in terms of gains versus 47%. By the way, the dividend yield for Exxon closer to 4.7%, and it's 4.3% for Chevron. So something to keep in mind. Now, Chevron is a part of the energy story today because it's a massive weighting as the second biggest player in U.S. oil and gas out there. Take a look at other ETFs besides just that spider energy sector, XLE. Vanguard Energy ETF, the iShares U.S. Energy ETF, the Fidelity Energy Index ETF, and the iShares Natural Resources ETF all have weightings in Chevron that are between 10 and 18, 19%, so they'll feel an impact there. And by the way, one other point of discussion we're going to talk about, those dividend yields I just mentioned also put companies like Chevron squarely in the mix of dividend ETFs like the iShares High Dividend ETF. That's down about 1/3 of 1% today. That dividend discussion is, of course, front and center as we talk about rising interest rates, Morgan. Back over to you.
Oh, such a good point. Dom Chu, thank you.